Welcome back to Explain the Charts, where we break down the complexities of market movements. Today, we're diving deep into Bitcoin, which has seen some truly wild swings leading up to August 15th, 2025. First, let's address the elephant in the room. Bitcoin recently surged to a new all-time high above $124,000, a monumental achievement that has captivated the crypto world. However, this euphoria was quickly followed by a significant pullback, settling closer to $118,000 as of yesterday. What triggered this sudden reversal? Recent news points to a hotter-than-expected inflation print in the US, which typically signals tighter monetary policies and can be bearish for risk assets like cryptocurrencies. Adding to the downward pressure, US Treasury Secretary Scott Bessent clarified that the government will not be making new Bitcoin purchases for a strategic reserve, reversing earlier speculation. This announcement likely removed a potential large institutional buyer from the market, contributing to the sell-off. Yet, amidst these bearish catalysts, we also have strong bullish news. Invest reported a rise in Bitcoin corporate adoption, and Google made a significant $3.7 billion investment for an 8% stake in TeraWulf, a Bitcoin miner. This massive institutional investment underscores long-term confidence in the digital asset space, even as Wall Street might still be underestimating Bitcoin's true value, as warned by Michael Saylor. These macroeconomic predictions and institutional moves are crucial to consider when looking at the broader market picture for Bitcoin. Now, let's switch over to the charts to see how these events have played out in price action. Looking at the daily chart for BTCUSD, we can clearly see the impressive run-up that led to the new all-time high. Prices have been in a consistent uptrend since late 2024, pushing beyond psychological barriers like $100,000 and establishing new support levels. Specifically, the candle for August 13, 2025, showed strong bullish momentum, closing near $123,320. Then, on August 14, 2025, Bitcoin opened around $123,365 and surged even higher, hitting that new record high of $124,533. However, observe the long upper wick and the significant red body of that August 14th candle. This indicates a sharp rejection at the peak and intense selling pressure throughout the day, leading to a close at $118,377. This dramatic reversal perfectly correlates with the news we just discussed, the inflation data and the Treasury Secretary's comments. The current immediate support on the daily chart appears to be around this $118,000 mark, which is where the price found temporary stability after the recent drop. Further key support levels to watch on this daily time frame include the $115,000 region, tested in early July, and the stronger psychological and technical support zone around $100,000 to $105,000, which held firm during previous consolidations in May and June of this year. Below that, we have historical support stretching down to the $88,000 to $90,000 range from November 2024 and March 2025 bottoms, and even the critical $78,000 level that provided strong bounces in March and April. The all-time high of $124,533 now stands as a significant overhead resistance level that Bitcoin bulls will need to overcome with conviction. Let's zoom into the shorter time frames to see the details of this recent volatility. Switching to the 1-hour chart, we can gain a more granular view of Bitcoin's ascent and rapid descent on August 14th. You can see the price consolidating just below the peak in the early hours before making its final push. The sharp vertical drop after hitting the all-time high is quite evident here, with several large red candles forming consecutively. This confirms the intense selling activity that occurred almost immediately after the new record was established. The volume on these bearish candles was notably high, reinforcing the strength of the selling pressure in response to the negative news flow. The pivot point for the sharp correction is very clear around the $124,500 level. We can observe the rapid swing from bullish enthusiasm to a significant price correction, highlighting the impact of fresh macroeconomic data and government policy statements on market sentiment. Now, let's narrow in even further on the 15-minute chart to dissect the peak and immediate fallout with even greater precision. On the 15-minute chart, the formation of the new all-time high and the subsequent aggressive sell-off are starkly visible. The candle at 0:26 Universal Time coordinated on August 14th marked the exact high of $124,533, and from that point, the market experienced a pronounced rejection. Notice the immediate succession of red candles following this peak, indicating strong bearish momentum taking over. The trading volume spiked considerably during this downturn, confirming that a large number of participants were actively selling their positions. This intense hourly and 15-minute selling pressure is a direct reflection of the inflation concerns and the news about the strategic reserve not buying Bitcoin, underscoring how quickly macro events can impact highly liquid assets. The price found temporary support around the $118,000 region, attempting to stabilize after the significant drop. However, continued vigilance is needed, as such sharp rejections often indicate that more downside could be in play in the very short term, especially if bullish catalysts don't emerge to counter the negative sentiment. The immediate support for short-term traders is at this $117,187 level, the low of the rejection day, which acted as a floor. A breakdown below this level on higher volume could signal further declines towards $115,000 or even $110,000. Conversely, a strong bounce from here would suggest buyers stepping in to defend the current price point. So, what are the overall reasons to be bullish or bearish on BTCUSD? On the bullish side, the long-term macroeconomic narrative remains strong. Bitcoin is increasingly seen as a hedge against rising US debt and potential dollar devaluation, as highlighted in popular crypto discussions. The continued rise in corporate adoption and major institutional investments, such as Google's recent stake in TeraWulf, signify growing mainstream acceptance and capital inflow. The fact that Bitcoin successfully hit a new all-time high demonstrates its inherent demand and potential for further price discovery once short-term pressures subside. On the bearish side, the immediate market reaction to the inflation data and the Treasury's comments indicates sensitivity to traditional financial news. The sharp rejection from the $124,000 level also suggests significant overhead resistance and profit-taking by early investors. The absence of government strategic reserve purchases, at least for now, removes a potential source of demand that the market may have anticipated. For short-term traders, the recent volatility means heightened risk, requiring careful entry and exit points. Long-term investors, however, might view current pullbacks as opportunities to accumulate at lower prices, betting on Bitcoin's fundamental value proposition and continued institutional integration. In recap, key price levels to watch are the immediate support at $118,000 and the critical psychological level of $100,000. Resistance is currently strong at the all-time high of $124,500. Unbiased predictions suggest a 70% likelihood of consolidation or a further pullback to the $110,000 to $115,000 range if current bearish news persists. However, a long-term bullish continuation towards new highs beyond $124,500 has an 80% likelihood within the next 6 to 12 months, provided institutional adoption continues and global economic uncertainty drives demand. A significant drop below $100,000 remains a less likely scenario at 20%, unless unforeseen macro events or regulatory crackdowns occur. When deciding when and at what price to trade, always look for confirming volume, clear candlestick reversal patterns on shorter timeframes, and continuously monitor breaking news regarding inflation, interest rates, and institutional crypto developments. These factors will dictate the likelihood of Bitcoin's next major move. That's all for today's in-depth analysis on BTCUSD. Don't forget to like, share, and subscribe for more insights from Explain the Charts.